Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. We had no major data points or triggers yesterday due to the US holiday on account of Labor Day, but it seems dollar has sustained its strength with no major sell-off of the dollar against any pair. JK, what are your thoughts? Do you expect any directional move today or in this week?
I think, Swaraj, we are at a point where we should see some good movements in the currencies as well as in the risk assets because the slowing down in China economy and also the Eurozone economy is likely to influence the other global markets. As we have already seen, the manufacturing and services are slowing down everywhere. Today, in fact, we had further evidence of services PMI falling in China when the Xiaxin Services PMI was, published, and it continues to be a trend overall in the global markets. And we have already seen that even the trade numbers are lower everywhere, indicating a lower demand in the global market. So, risk assets are at a very tentative level where it can have some impact on the downside. We are also seeing the dollar reacting strongly despite a weak set of employment numbers last week, and yields on the longer bonds are higher, which is again putting the dollar on a strong phase because of the attraction of yields, and some more stay safe when buying is also supporting the dollar. Coming to our own rupee, as expected, the rupee was in a tighter range because of no cash outflow being possible with US on a holiday. But there are more challenges emerging for the rupee. The oil price is holding at 9-month highs. We are also seeing that the import of oil from Russia has fallen substantially in the recent months, and the oil, whereas our demand is sustaining at higher level, that means we are losing that advantage of the discount that we used to get from Russia. So this will have an impact on our balance of payments as well. And we also seeing dollar strength and the dollar yields rising, which keeps the rupee on a slightly weaker footing. I'm also observing some, uncertain political atmosphere after the intention of having a, one nation, one poll. How this will turn out is not very clear to investors, whether we will have a preponement of the general election or the slight postponement of the state election so as to have them together. But it's a very, very murky situation which investors would like to observe, and therefore I do not see any big inflows coming into the Indian market, whereas we are having steady outflows and also import demand, which will keep the rupee, or rather the dollar rupee, well bid. On a day when US was closed, we had some news from Eurozone. The German economy continues to be a drag on the region, and the Centix, confidence index fell again to minus 21.5 from minus 18.9 in August. That is for the Eurozone, and the German economy weakness is also actually telling on the overall region's weakness. We have had PMI numbers from Germany, which was painting a very grim picture, and this is likely to probably show its same color in the services PMI, which will be published today. German trade surplus narrowed, but we saw a big fall in their exports, and German economy thrives on exports, and that is again not looking good for the overall Eurozone economy. And then the very weak background of economies and somewhat moderating inflation. Lagarde's speech yesterday did not give any hints to the market about what their monetary policy approach would be in September. But right now, it's only 1 in 4 chances of a hike in Europe in their September meeting. On the Chinese side, of course, we had good response to the measures announced over the weekend in the stock market, but that's again not sustained today. We are again seeing the markets slightly slipping, and I think the piecemeal announcements of measures by the Chinese government and the Chinese central bank is not really helping. They are actually hesitant to announce any big bazooka of measures, just like they did post global financial crisis, because they have a huge debt overhang. Therefore, any recovery in China at best can be very slow. But at the same time, the Chinese yuan is failing to respond to these measures much. We are once again trading much closer to 7.30 despite all these measures. And the Chinese yuan is telling upon weakness in the Asian region also. And of course, this will have some impact on the Indian rupee as well, where 80 to 85 remains a very strong resistance, being protected by the central bank. But importers are raising their buy level well above 80 to 50. So we are slightly increasing, rather raising our range on the rupee. So overall, we have not such a great calendar for this week, but we do have some PMI surveys on services, and then we have the Australian rate decision today in another less than 90 minutes, and that will set the tone for the risk sentiment in the region, because Australia follows the prospects of Chinese economy, and whether the central bank is confident enough to raise rates in the current tentative atmosphere, it is very doubtful. The expectations are for steady rates to be maintained at 4.1%. So, but with the full market back in after the vacation and also the labor market holiday, I think we are likely to see some good movements in the currencies as well as in the risk assets. And for me to start with, it will be a stronger dollar, and also risk sentiment somewhat weak. Thank you.
Thank you, JK. And I think the two key takeaways for me is the Chinese economic slowdown as well as the European slowdown, which is going to drive the markets in at least in the coming weeks. As we saw, services PMI fall again in China, and yuan is under pressure despite good stimulus measures during the weekend. On the European economy front, the German economy continues to be a drag for the EU. PMI from Germany was quite weak, and today we have a German services PMI, which can again print a weaker number. We have the Australian rate decision today. Now Australia is quite a China-dependent economy, so their decision will also be quite crucial to watch. And for INR, we remain in a tight range. We are seeing some negative factors emerge for INR, with oil prices holding at 9-month highs, while also the import of oil from Russia has fallen in the recent months. So the advantage of the discounted oil from Russia is also reducing, putting some more pressure on the INR. That's it from us today. Tune in tomorrow as we discuss the latest in the financial markets. Thanks for listening.